Traders at Access Bank say they expect a quiet session at the Treasury bills market today as investors take part in the Treasury bill market auction, where the DMO will offer a total of 887 billion naira. Dimeji Obasa, a fixed income trader at Access Bank, joins us now for a market update. Dimeji, it's a pleasure to have you on the program. Before we get to that auction, just broadly from what you've observed over the last couple of auctions, I want you to comment on the DMO's recent comments around debt sustainability in Nigeria, pretty much saying that we need to really deal with this in a very constructive way to address the fact that we're getting to the tipping point now. It's not sustainable to continue to borrow. How is that, in your view, manifesting in the auctions that we've seen in the last couple of sessions?
Okay, good afternoon. Thank you very much for having me. With regards to your question, what I would say is you're right. We're at somewhat of a tipping point with regards to the country's debt levels and interest payments. However, for the auctions, we've not necessarily seen that play out in the closing rates at these auctions. What we've seen, as a matter of fact, has been rates being very volatile, tied more to the levels of system liquidity at the time of the auction. Which is, at the point where the market is incredibly liquid, we would see the yields fall significantly. And where market is tight, from a liquidity standpoint, we see the yields increase. There's not necessarily been that longer term view in terms of the direction of the country as far as interest payments go, and having that higher credit spread for the higher levels of debt that the country has.
Well, system liquidity clearly is a very major factor that should influence interest rate levels. But then again, as we've seen in many countries elsewhere, when market sentiment begins to turn in terms of the risk in terms of being able to get your money back, then those rates could begin to ramp up very quickly. I'm wondering, when we begin to hear those type of comments from the DMO, do you get any sense that some people are beginning to get a little concerned, or would you say that market players are generally still, at this point, comfortable with the fact that the opportunities for the government to borrow are still there and the risk is still the risk profile really hasn't changed?
Yeah, I mean, for local debt in particular, which has been the bulk of the auctions that we've had in recent times, to a very large extent, I'd say that the concern of default is very minimal, right? Given the fact that the government has full control over the naira and would be able to repay the debt denominated in naira. As far as the concern of market participants, or what the perception is, what I'd say is that yes, there's been a lot of concern given the levels of risk, given the level where rates are. We are not necessarily seeing the country's debt instrument priced appropriately, if that makes sense, right? However, if as a market participant, what you still have to do is just trade with the market. If I, for instance, were to think that yields should be significantly higher than where they are, I would end up not winning my auction bid. So you kind of have to still, go along with that interplay of supply and demand.